Hello and welcome to Finextra TV. I'm Liam Xavier and you join us at the Digital Assets Forum in London. With me now is Peter Left, the Head of Digital and Market Innovation at Lloyds Banking Group. Peter, lovely to have you here.
Thanks for having me, Liam. It's nice to be here.
Absolutely, and if we start with the Great British Tokenised Deposit, something that's a cross-bank initiative and very much positions the UK in this new race towards tokenisation. What does this mean for the standing of the UK across the global efforts in this, and why is it now that countries are focusing on legitimising tokenisation?
Well, I think the UK, with the Great British Tokenised Deposit project, has a chance of leading every other jurisdiction in terms of interoperable, bank-issued, regulated, compliant money, so that you don't have a plethora of $200 stablecoins, I think is the current state of play, and you don't have to take them to an exchange to convert them from USDA to USDC. The Great British Tokenised Deposit project is about a Lloyds tokenised deposit can be fungible with an HSBC tokenised deposit, with a NatWest tokenised deposit, Barclays tokenised deposit, and others. Everyone is welcome as long as you have a license to issue money and can deliver central bank reserves on demand, so that tokenised deposit can be fungible, and that collectively, rather than having individually branded money, we present a nationally branded money that comes with all the benefits of bank regulation, but hopefully all of the new advantages of tokenisation, being available on blockchain, composable with other smart contracts, so we can start to build better, more exciting customer journeys.
What's the main reason for that sort of additional peak now? Is it more the change in technology or the change in mindset, would you say?
I think people have been given the space to consider the value of crypto assets, and that the value isn't the crypto assets themselves. It's now much easier to drill down and go, actually the value is the technology that sector has created, and we can now look at deploying that technology to effectively replumb traditional finance. And I think the narrative has changed, the willingness and the tolerance has changed, so that we can actually look in and see and take the time, and actually the value add is the tech, and let's deploy that tech to improve traditional finance rather than trying to reinvent money. Because there are lots of good bits about traditional finance, and I think there are lots of good bits about blockchain technology, and I think let's merge them together. And it's great now that the private sector, working with the public sector with things like the national payments vision, and your listeners and watchers might be familiar with Sarah Breeden's speech on Monday, talking about next generation. She mentioned three things in that speech, and one of them was tokenised deposits, interoperability, stable coins. And so I think in the UK, we've got a very supportive public sector to help us bring that to life, as well as the right ecosystem globally.
What about this key concern, especially this year, around financial crime? When we have tokenised deposits, tokenisation, how does that affect financial crime, especially when it comes with more anonymity in some places and the digital nature in general?
So tokenised deposits will have to, and as we build them, are going to meet the same compliance requirements as deposits in a bank account. So we have to go through KYC, right? And that's why having a network effect of banks in GBTD is important, because otherwise only people that I onboard at Lloyds can work with the Lloyds tokenised deposit. Like the same way that to hold a Lloyds tokenised deposit, you'll have to go through the same process of opening a transaction bank account with Lloyds. But if you want that Lloyds tokenised deposit to be able to go to someone who doesn't bank with Lloyds, then we need that network effect, that ecosystem, so that NatWest's KYC can apply, or HSBC's, and we can have that interoperability, and they can, my business customer or a retail customer can engage with theirs using the programmed, customer journey that they've been executing against the tokenised deposits, and it can be fungible, and we can have that network effect. Otherwise, with tokenised deposits, it'd be a very closed loop ecosystem. Certainly lots of people could own their own wallet and operate their own wallet, but I'd still have to onboard every single wallet, which sort of limits the network effect with respect to tokenised deposits. So that's why we think go for work together as GBTD, so that we can have a sort of safer, regulated form of money, that's sort of compliant with payment services regulations, is backed by FSCS deposit guarantees, etc. But can start to have some of the network effect that stablecoins often have, because they don't have quite the same KYC requirements. So in GBTD, we replicate KYC, fraud, compliance, PSR controls to the same extent we would with account-based money. And I would argue that as we learn more about the technology merging with that traditional finance, that maybe that allows us to make better fraud controls, because it won't be an anonymous ecosystem for GBTD. We'll make sure that your data isn't shared inappropriately, but where it should be shared for fraud, compliance, sanctions, we can, because the data is there and it's been collected by hopefully institutions people trust.
And in the name itself, it says Great British. Why is it important for these countries to have their own versions of tokenized deposits or stable coins, as opposed to anything that's just internationally shared?
Well, in the same way we all benefit from our own fiat currencies, we want to preserve that. As I think what's important to remind ourselves is that a sterling tokenized deposit is backed by loans to the United Kingdom. The mortgages that we all need to buy a house, the credit cards, the car loans, the small business loans, your revolving credit facility, your working capital facilities, all of that, public, private sector lending and therefore growth in our economy is powered by sterling denominated fractional reserve banking. And so every country is going to want to preserve that, but uplift it to improved rails so that we can have programmability. And then we need to start working with all of those other jurisdictions to connect those networks together so that they're interoperable, and we can improve cross-border trade at the same time as we improve domestic use cases.
Really interesting stuff there. Thanks for joining us.
Thanks very much, Liam. Nice to be here.